Okay, good morning, guys. Welcome back to the online class. Okay, now let's we see the difference between money market versus capital market. Okay, the first features is a duration of funds. Okay, so already we explained about that money market versus capital market, I think. Okay, so duration of funds is a money market. It's a money market that providing the short-term financial assistance. Okay, money market providing short-term financial assistance. So short-term financial assistance means is a less than 1 year. Okay, it's a less than 1 year, or it's a not exceed the 1 year. It is known as money market, but durations mean only 1 year. Okay, it's a money market duration is 1 year. Okay, at the capital market, and the capital market mean it is providing the long term financial assistance to the public. Okay, capital market providing long-term financial assistance. So it means it's a exceeding 1 year. It's a exceeding 1 year mean is a more than 1 year. Okay, did you understand, sir? A duration of funds between the money market and capital market. Money market mean it's a less than 1 year. Capital market mean it's a more than 1 year. The money market providing short-term financial assistance, capital market providing long-term financial assistance to the public. Okay, did you understand? The duration of funds 1 year is a more than 1 year. Okay, then supply of funds. Okay, the supply of funds means it's a money market that providing the working capital requirements. Okay, money market providing working capital. So working capital means the short term financial assistance. Okay, it's a capital markets are providing fixed capital requirements. Okay, so what's the meaning of the working capital requirements? Working capital mean it's in every business concern how to run the business. The short term it's a working capital is necessary. So working capital mean the day-to-day expenses, the day-to-day expenses how to we can meet the day-to-day expenses, like how to provide the salary and wage, or the stationery purchase, like that expenses, our weekly expenses or monthly expenses how to meet, so we can utilize the fund from the working capital. So the working capital very the necessary, very important to the business concern. So the money market providing working capital means the short-term financial assistance, but the capital market the providing the long term capital. So long term mean the fixed capital requirements. So fixed capital requirements means how to buy land or machinery, so like that, it's the bulky quantity or the bulky commodity. So bulky then valuable commodity how to purchase, maybe we want that is more money now, so it is we can utilize the fixed capital. Okay, did you understand, guys? So the supply of funds mean money market supply working capital, capital market supply fixed capital. Money market mean we can meet the day-to-day expenses. Working capital mean we can meet the day-to-day expenses. Fixed capital mean it's a long-term requirement. So long-term requirements like bulk quantity machinery, so machinery and land, so like that. Okay, next deals with instruments. Okay, it's a money markets, it's a deals with instruments like commercial bills, such as treasury bills and commercial papers. So money market deals only the treasury bills and the commercial papers, but the capital markets deals with shares and debentures and the government bonds. Okay, do you understand? It's a deals with instruments mean money market deals only the treasury bills and the commercial paper. Capital market deals with shares and debentures and government bonds. Then some money value. Okay, so the money value, so according to the money market, the money value it will be the differ from the each bills. Okay, for example, the treasury bills means minimum it will get 1 lakh. Okay, treasury bill, suppose I can issue the treasury bill means it will get the 1 lakh. So it will 1 lakh. At the same time I can issue the commercial paper, the certificate of deposits or commercial papers mean which will get up to the 25 lakhs. So it will be differ from the varied, it will be the varied from the bills to bills. Okay, then here the capital market mean it will get each share value rupees 10 and the debenture value rupees 100. So that means I can issue the 1 lakh shares means what's the meaning of the shares means it is a part of the capital. Shares means a part of the capital. Per share value 10 rupees means total capital it's a 1 lakh means per total value how much rupees is a one 10 lakhs. So this is the capital. Okay, but did you understand? So one, it is a small amount, it's a share value 10 rupees and debenture value is 100 rupees. Okay, So it is also, it will the differ the based on the company. Okay, it's the shares we can determine the based on the par value and the discount and the premium. It is also we can determine the based on the company. The good company mean the shares, it will the shares we can issue in the par value. It's a very the medium level company. So medium level mean average companies mean shares will issue in the uh, power value. Okay, then it's a very the low level companies means very the business are going the business we can going very loss, so like that company we can issue the shares in the discount. Okay, so good company mean the shares we can issue is a more than the par value. It means it's a premium. Okay, it's a average company means shares will issue in the par value, but it's a loss companies who can issue is the less than the par value. That means a discount. Okay, then role of major institutions. Okay, so mostly according to the money market, the central bank and the commercial banks we can play the vital role in the money market. Okay, central bank and a commercial bank, it's a we can major role we can play in this market. Next, the capital market mean it's only it's a development bank and insurance companies we can play the dominant role in the capital market. Okay, so development banks, insurance companies. So development banks like IDBI, ICI, so like that, it is a development banks and insurance companies we can play the vital role in the capital market. Okay, do you understand? Money market mean central bank and a commercial bank we can play in the money market, but capital market mean development bank and insurance companies. Development banks like IDBI and insurance companies also. Next, availability of the instruments. Actually it's actually here instrument generally do not have the secondary market. Actually here do not have the secondary market, but here we are issue only the secondary market. Okay, so instrument secondary market secondary market instrument only we are issuing here, but here we are not issuing the secondary market instrument. So like that means we will not issue here the shares and the debentures. We will here issue only treasury bills and a certificate of deposits only. Then subdivision. Actually there is no the subdivision here. According to the money market there is no subdivision, but here is there here is there subdivisions like primary market and secondary market. Okay, did you understand? There is no subdivision. Here is there subdivision. So capital market maybe we can divide it into two, primary market and secondary market. Next, place of transaction. Actually according to money market there is no the formal place. According to the money market there is no formal place. So anything here to we can conduct, or anything we can clear the doubts, or we have to we can, anything we have to ask, so directly we can get the information through the mobile phone only. Okay, we can get the information through only the mobile phone. Okay, because of there is no the formal place. But according to the capital market is there formal place. For example, stock exchange. Could you understand? Money market mean there is no formal place, but here is there formal place. Okay, we can get the information through mobile phone. Here we can directly we can meet the agents, and we can get the information in the stock exchange. Okay, so next, participants. Okay, so the participants, then here the transaction we can transaction. Okay, so the without the we can without the so without the help of the brokers and the bankers and RBI and government we cannot do the transaction. Okay, did you understand? So we can do the transaction in the money market with the help of bankers, RBI and the governments. Okay, so because of here the brokers we can play the vital role in the money market. So already we have discussed this points also. Okay, so deals with, so we can discuss the transaction we can conduct and with help of brokers and bankers and RB and governments. But here, so we can transaction we can conduct with the help of authorized dealers. Okay, authorized dealers like broker, investors, merchant and underwriters and commercial banks. So those are the participating in this capital market. Here banker and RB and governments are participating in the money market. Okay, did you understand, guys? So this one participants money market mean, so that is a different, that's a means here also the broker participating, here also the broker participating, is a banker and RBI governments is like they are acting as a broker in the money market. And here also it's a investors, merchant, banker and writer, commercial banks, so they are also we can acting as a broker in the capital market. Actually they are the broker, so they are the broker, they are acting so between the public and money market. Here also we are acting between the public and capital market. And then number of instruments deals. Okay, so according to the money market there are the six type of instruments we can deals. Okay, six type of instruments we can deals. And the first one, it is a interbank call money. Second is a notice call money up to the 14 days. Next is short term deposits 3 months and 91 days treasury bills. Then 182 days treasury bills and commercial payables also. It will we can discuss in the next class. Okay, we will discuss briefly in the next class. Okay, but the six type of the bills we can issue in the money market. But here very few only share and debentures. So only two documents, two instruments only we can deals in this capital market. Then claims. So here the money market, the financial claim we can assets and securities deals in the money market. Okay, so assets and securities only we can deals in the money market. But here bonds and shares we can deals in the capital market. But here according to money market, low credit and market risk. That means low credit mean income is very low, but risk is there. Could you understand? So low credit mean income is low, but risk is there in the money market. But here high credit and market risk. High credit mean risk is very high, but the return also, so sorry, the high credit mean the good income, the good return, but is a risk is very high. Could you understand the difference? Is a low income but risk is there, but here high income is a risk is very high. Then liquidity, highly liquidity money market. So highly liquidity means because it's a short term financial assistance, so here we can highly liquidity, so money market. So either financially, so liquidity cash we can flow the liquidity cash here, but a low liquidity in the capital market. Okay, next, price discover. Actually, no price discovery the mechanism exists in the money market. So price discover, here we will not we can determine the price any commodity. So any commodity price will change, price we can increase or the decrease, but here it will not affect here. But here, so price discover the mechanism, but the capital market we can determining the price. Capital market the determining the few commodities prices like gold and petroleum is like that, so everything we can determine by the capital market only. So the based on the capital market only we can fixing the gold price and iron, and so like that the few commodities price we can determine by the price. So here no price discover, but here price it will discover. Next, regulator. Okay, actually the money market regulating central bank, so mostly it's a most of the authority. So the central bank is the most of the authority. Central bank mean is RB, mostly we can controlling the money market. But here besides central bank, besides central mean not only the central bank, and SEBI also we can controlling the capital market. So mostly guidelines everything is provided by the SEBI. Okay, so here only central bank controlling the money market, and here central bank and SEBI controlling capital market. Then underwriting is not the primary function, it is a primary function. So underwriting means it's a written documents, but here it's not functioning here. So underwriting the document is not a primary function, but here that is a primary function. Next, dominant institutions. The commercial banks are mostly dominant into the money market because of the commercial banks only the providing this the treasury bills and certificates of the short term loans. I told in as a working capital. So the short term financial assistance are provided by the commercial bank. So the commercial bank only the mostly we can dominating the money market. But here it's a non-banking financial companies and special financial institutions. Non-banking financial institutions mean and LIC and IDBI I told you know. So this kind of the companies and the financial institutions only we can dominating the capital market. Okay, so this is the difference between money market versus capital market. Okay, did you understand, guys? Okay, if you have any doubt, can you ask? Then I will explain about the money market versus capital market. Okay, thank you so much.